Ever wish there was like a roadmap to feeling financially secure? Instead of just feeling lost in bills and budgets.
It's a common wish. There are some good principles out there, though, that can make a big difference.
And that's what we are diving into. We've got this
Mhm.
excerpt from Investopedia. It's their ultimate guide to financial literacy for adults. We'll break it down, find those aha moments to upgrade your financial life.
Sounds like a plan. Sometimes it's the simplest things that make the biggest difference, like understanding the basics.
Totally. And they start with something that seems super basic, having a bank account. Which, okay, I was shocked to learn that 6% of U.S. households still don't have one.
Yeah, it is surprising. And it just highlights that everybody's financial journey is different, right? There are barriers. Maybe they can't meet the minimum balance requirements. Or maybe they've just had experiences that make them, I don't know, a little wary of traditional banks.
It's easy to assume everyone's starting at the same place, but that is not always the case.
Exactly. But for those who can, having a bank account, that's the foundation. Keeps your money safe.
Yeah.
You've got that FDIC insurance, and it gives you access to all those services that just make managing your money easier, like debit cards and checks and direct deposit.
It's like, I don't know, the difference between having like a home base and just wandering around lost, right? And speaking of a solid foundation, the article talks about more than just basic savings accounts. They get into high-yield savings accounts, which honestly, just the name sounds amazing, right? Higher interest, that means my money's growing faster, right?
Absolutely. Yeah, you can think of it like this. A high-yield savings account. That's like planting your money in, I don't know, really fertile soil, right? It's still your money. It's safe and sound, but it has the potential to grow a bit faster thanks to that higher interest rate.
Okay, that's a much more exciting way to think about savings. But I
Uh-huh.
know there's often a catch. What's the trade-off with these high-yield accounts?
You're right. You always want to be a little cautious. Sometimes these accounts, they come with higher minimum balance requirements. So, for example, you might need to have, say, $5,000 to even open the account or to avoid monthly fees. So it's important to shop around, see what lines up with your savings goals and your habits right now.
So if you're just starting out, maybe a regular savings account is a better fit until you build up that balance a bit.
Exactly. It's finding the right tool, for your financial journey right now, and know that you have options to explore as your situation evolves.
That's a good segue to the next big thing the article talks about, which
Yeah.
is emergency funds. You know that rainy day fund everyone's always talking about?
Yeah.
But let's be real, it's more than just like stashing some cash under the mattress, right?
Yeah, for sure. Life it throws curveballs. Like suddenly you've got medical bills or your car needs a major repair. Maybe you even have to take some unexpected time off work. An emergency fund, that's your safety net. So you don't end up going into debt when something unexpected happens.
It's like that financial cushion, right? So a minor setback doesn't turn into a major financial crisis.
Yeah, exactly. It's about peace of mind, like knowing you've got this,
Yeah.
that you can handle those bumps in the road without, totally derailing your entire financial plan.
Okay, so we've got our bank account, we're building that emergency fund. What's next on this roadmap to, financial wellness?
So the article dives into something that's, it can be a really powerful tool, but it can also be a little intimidating. Credit cards.
Right.
A lot of people use them, but I'm not sure everybody really understands how they work, which I think that's where people get into trouble.
It's easy, I think, to think of them as just like another way to pay. But it's borrowed money. You have to pay it back.
Mm-hmm.
Something I'll admit I didn't fully grasp for a long time.
Yeah, and that's why, understanding that difference between credit cards and debit cards is so important. So when you're using a debit card, that's your money, right? It's coming straight out of your checking account. But with a credit card, you're taking out a short-term loan that you have to pay back. And usually, with interest, if you don't pay the balance in full each month.
And that interest can really add up. The article said that Americans owe, get this, over $1 trillion in credit card debt.
Yeah.
That's a crazy amount of money.
Yeah, it's a lot. And it just highlights how important it is to use credit responsibly. And this is where understanding APR is super important. That stands for annual percentage rate. It's essentially the interest you're charged on your balance, and that can make a huge difference in how much you end up paying back over time.
Oh, okay.
Yeah,
So it's like this hidden cost that can kind of sneak up on you.
exactly. So let's say you've got a credit card, it's got a 15% APR, which is, a pretty average APR, and you're carrying a balance of $1,000. Well, over a year, that means you could end up paying an extra $150 just in interest.
Wow, I actually never thought about it like that. It's like paying extra for everything you buy.
That's a great way to put it. Yeah, exactly. So that really highlights why paying your balance in full on time is so important. But of course, there's a lot more to think about when it comes to credit cards too.
Right. Like all those reward programs, the article talks about travel rewards and cash back,
Yeah.
balance transfer. It's like they're trying to appeal to every kind of spender out there. Is there like a frequent podcast listener rewards card I'm missing out on?
Uh-huh. That's a good one. Maybe someday. But no, seriously, finding a card that really lines up well with your spending habits, that can actually save you money. So like if you're someone who travels a lot, a travel rewards card that can help you earn free flights, hotel stays, things like that.
So it's about being strategic. You're making those rewards work for you, not against you.
Exactly. And speaking of strategy, let's talk about something that I think often gets a bad rap. Budgeting. I know. It's not quite as exciting as, racking up those travel points or anything, but honestly, I think it's like the real key to feeling in control of your money, right? To having that financial freedom.
Well, and I think a lot of people, myself included, we hear the word budget and we think restrictions and limitations. But the article talks about how it's really about taking control of your money. Would you say that's true?
Yeah, absolutely. It's about understanding where your money is going so that you can make conscious choices that are lining up with your goals. So whether your goal is to save up for a down payment on a house, maybe it's to finally take that dream vacation, having a budget is just going to help you get there faster.
Speaking of goals, they mentioned this 50-20-30 rule for budgeting. Is that something you recommend, something that you think makes sense?
Yeah, it's a great starting point. So the idea is you allocate 50% of your after-tax income, your needs. So that's things like your housing, your groceries, transportation, all of that. And then 20% goes towards your savings and any debt repayment. And the remaining 30% is for your wants. So things like dining out, entertainment, all that fun stuff.
That makes sense, but is it realistic? Like, can people actually stick to those percentages, given all the different expenses that come up in life?
Yeah, so it's definitely more of a guideline than a hard and fast rule, right? You might find you need to adjust those percentages a little bit just based on your circumstances. So for example, like if you live in a really high cost area, housing might take up more than 50% of your income. Or if you're someone who has maybe a lot of existing debt, you might want to allocate a little bit more than 20% towards paying that down.
So it's about figuring out what works, but having that structure.
Exactly. And I think where the magic really happens is when you start tailoring it to your own specific goals. Because think about it. If you could just free up even 10% of your income just by being a little bit more mindful of your spending, what could you do with that extra money?
Okay, yeah. That's a motivating way to look at it. Now let's move on to what I think might be the most intimidating topic of all for a lot of people.
Okay.
Investing. I think a lot of people, they hear stock market, their eyes glaze over.
I get it.
It just seems really complicated.
Yeah, it can seem incredibly complex, but it doesn't have to be. And remember how we were talking about earlier that high-yield savings account, like planting your money in fertile soil? Well, investing, that's like taking that fertile soil and using it to grow, like a whole orchard, It has the potential for much higher returns over the long term.
That's a great analogy. But where do you even begin? The article mentions different types of brokers. It just all starts to feel a little overwhelming.
Yeah, I hear you. It's like walking into a giant financial supermarket, right? Endless aisles, all these different investment products. But let's break it down. Let's demystify some of those terms.
Okay, so we're in this financial supermarket. I'm overwhelmed. There are so many choices.
Yeah.
Where do we even start?
Good question. Let's start with maybe the most common one that people think about, stocks. So remember how we were talking about buying a tiny piece of a company? That's essentially what you're doing when you buy stock. You're kind of betting that that company is going to do well, that the value of your piece is going to increase over time.
So it's sort of a gamble then, but with the potential for, big rewards if you choose wisely.
Exactly. And that's where diversification comes in, it sounds kind of fancy. But really what it means is don't put all your eggs in one basket. Instead of betting on just one single company, you spread your investments out across different industries, different sizes of companies, maybe even different countries.
So like instead of buying all apples, get a few oranges and bananas in your investing basket.
Right. Precisely. That way, if one company or even one whole sector of the market, takes a hit, your whole portfolio isn't wiped out. You've got that cushion built in.
That makes a lot of sense. So then where do ETFs and mutual funds fit into this? The article mentioned those as well.
Those are like pre-made baskets of stocks. So think of ETFs or exchange-traded funds, kind of like those variety packs of chips you get at the store, right? Like they contain a bunch of different stocks that are all tracking a specific market index or sector. It could be technology, healthcare, emerging markets, things like that.
Oh, so it's instant diversification
Yeah,
without having to pick every single stock yourself.
you got it. And mutual funds. Those are kind of similar, but those are actively managed. So you've got a fund manager who's making those decisions about what to buy and sell, which can be good for folks who maybe they want a little bit more of a hands-off approach.
Okay, and then there's bonds, which always seemed, I don't know, kind of mysterious. Are they as risky as stocks?
Those are a little bit of a different flavor. Imagine loaning money either to a company or to the government. That's essentially what you're doing when you buy a bond. And they're basically promising to pay you back that principal amount plus interest over a set period of time.
Okay, so it's more about that steady income than the potential for like huge growth that you might get with stocks.
Exactly. So yeah, bonds are generally considered less risky than stocks, but they also typically offer lower returns as well.
So it's all about finding the right balance, it sounds like. But I have to ask, I think a lot of people listening are probably thinking the same thing I am, which is how do you know when to start investing and how much to invest? That part always feels kind of daunting to me.
Oh, for sure. That's such a common concern. And my advice is always start small, be consistent. Investing is a marathon, it's not a sprint. It's really about building healthy habits over time.
So even if someone, they can only afford to invest a really small amount each month,
Yeah,
it's still a good idea to just get started.
absolutely. Because even small contributions can grow significantly over time. And it's all thanks to this beautiful thing called compound growth. Think of it like imagine a snowball rolling down a hill, right? At first, it's small, but as it's rolling, it's picking up more and more snow. It just keeps growing bigger and bigger.
So those small, consistent investments, they gain that momentum, and they can really make a big impact over the long run. That's really encouraging. But before we get too excited about investing, you mentioned earlier that it's really important to have that solid financial foundation first. What does that actually mean?
Well, you want to make sure you're not building your investment house on shaky ground, right?
Yeah.
So before you even think about jumping into the stock market, really prioritize those essential things like building up your emergency fund, paying down any high interest debt, especially credit cards, having a budget that actually allows you to save consistently, all those things.
So make sure your own financial house is in order
Mm.
before you start, investing in other people's houses, I guess,
Hmm.
or companies or orchards or whatever it is.
Exactly. And, I always say this, financial literacy is a journey. It's not about becoming, an expert overnight. It's about continually learning and then just making informed decisions that are really lining up with what you want, what your goals are.
We've covered so much ground today, from the importance of having a bank account to understanding credit to budgeting, even demystifying a little bit this whole world of investing. If you had to leave our listeners with just one thought to take away from all of this, what would it be?
I would say financial empowerment, it really starts with knowledge. Even taking just one small step today, maybe it's checking your credit score or setting up a budget tracker or even just, looking into the different types of savings accounts that are out there. It can make a big difference over time. And I promise you, your future self will thank you for it.
Couldn't have said it better myself. So, as you go about your day, listeners, think about that one small step that you can take. And remember, this journey to feeling good about your finances, it's best taken one step at a time. Thanks for diving deep with us.